Well, this is a buy everything kind of market, whether you're looking at gold, crypto, equity, Nvidia, it's all working and we've all become momentum traders. But as we look ahead at non-farm payrolls and the US CPI print next week, we ask, are the tides of change upon us, or could we see further relief rallies coming through that gives more life to these trades? Is it the time to go long volatility at the moment? These are all factors we consider in the trade-off. Well, hi there, my name's Chris Weston, Head of Research here at Pepperstone, and I'm going to be joined by Mr. Blake Morrow from Forex Analytics. Mr. Blake Morrow, come straight into the programme because I can hear that marching feet to the moment of Donald Trump mixing it up with Mr. Biden. It's now confirmed. Well, it's pretty much done deal. Nikki Haley's dropped out. It's going to be deafening. It's going to be deafening as we go into November. How are you seeing this playing out? Are you hearing people talking about it a lot more now in the streets and the pubs of Phoenix?
I'm just waiting to see the Trump dance. I think he dances like this. Like, hold on, real quick. That's it, right? I think he moves his hands together. Anyway, yeah, it's gonna be a hell of a year and a hell of an election cycle. I think
it's gonna be painful, but it's gonna be good when we get to the into the debates, because the debates are going to be spicy, aren't they? But I think it's now really just a march until we get through to that November period, and I think we get that situation. But it all seems to be confirmed now. Obviously, we're going to get that fully confirmed in the conventions going forward. But yeah, big times in US politics, right?
They're big times, and to watch them debate is going to. I mean, Trump would absolutely destroy Biden. I mean, it's going to be a spectacle. I'm thoroughly excited to get some popcorn and watch.
Have you ever seen Jonathan Pye, the UK comedian?
No,
he's done an amazing sketch on it today. You have to have.
Oh, really? I'm gonna go find it.
Yeah. Anyway, let's go into some of the topics that matter. Let's go topical thunder. Well, we can't go past it because it has been everything that everyone's talking about at the moment. Bitcoin, crypto, it's all been moving. And moving aggressively. I mean, I think a couple of sessions ago, session ago, we saw, crypto or Bitcoin trading in a nearly $10,000 range, high to low trading range, which was the biggest range, I think, since 2018 or so, one of the biggest we've ever seen, which is not surprising given the price that we've got at the moment. But that's, it's great for those who are long and holding. But also for those who like to plough their craft intraday, long and short, you've got massive range by which to work with. And, some people say, look, the spreads can get a little bit wider in crypto, but where else are you going to be able to get a $10,000 range for paying, for that spread? So it's great for the day traders who want to, move in and out of those positions, but also for those people who are buying and holding, they've been getting an absolute ripper. And we can talk about ETF inflows, a potential Ethereum cash ETF, which looks like it's a done deal, or a question of when rather than if. MicroStrategy buying, you're just momentum chasing. You've seen that in the gamma flows and various factors, but it's just a massive momentum chase that's been on in all parts of, whether you're looking at futures, options, underlying coins, wherever you're looking at. And so for me, it's buy the dip. The question is how cute can you be with those dips? So are you bullish? Are you fading it? Are you seeing it as a good trading vehicle, long and short? How are you looking at that right now?
Well, first of all, I'm not fading it. I actually did a YouTube short on our channel yesterday, because when you get that much activity, it's like I have to say something about it, and I just want to make sure no one was shorting it. That was like the message I wanted to get across. But how big of a dip is? I mean, yeah. I think it's only a matter of time before we breach 70,000 and we get a foothold above it. But again, in your words, how cute do you get with an entry on some sort of pullback? I did think that 14% intraday move lower would have shaken the trees a little bit more. I thought we might have gotten a little bit more follow through towards the mid 50,000 range before we started seeing buyers. Well, buyers are not succumbing. And here's the thing: you have situations like today, the NYCB, the bank in the U.S. that's now needing more funding. You have situations like that, and where do you go? I mean, you go to gold or you go to Bitcoin. If you want an alternative type of vehicle to protect yourself,
go to NVIDIA.
or you go to NVIDIA. Yeah, I mean, there are other options, obviously, but Bitcoin is almost like a shelter, de facto from a defaulting type of situation. So I like it. I don't know how far it's going to dip. Like I said, it's only a matter of time in my book. As long as it's above 53,000, it's only a matter of time before we get into new highs and start sustaining new highs. And another
I just
round
want to say
of
this
FOMO
as well,
comes
Blake.
in.
I want to say this as well, Blake. Like, I don't buy and hold crypto. I think it's a fantastic trading vehicle as well. I mean, but the one site that I like to get my information from, and I'm sure a lot of people who are watching this are, very, very deep in the crypto scene and just be very familiar with you. But CoinGlass is the place to look at because there's so much focus on the derivative space that gives you a lot of really good, clean trading information, such as, when we saw that really big spike down in the crypto price, you're looking at how much liquidations have gone through the exchanges, how many people have got wrecked effectively, long and short. Not that you can trade off that information, but it gives you some quantitative information. There's also a lot about the option profile, where the strikes are, how much call buying's going through. So you can obviously see people, if it trades through those strikes, generally the dealers who have sold those calls are going to have to go and buy the underlying, which then perpetuates the move higher. So there's a lot of really good information for traders on CoinGlass. I like to keep a beady eye on what's going on there as well. So that's good for those people who are actively trading it, as opposed to sort of falling in love with a direction and just holding.
All right. Well, let's turn our attention to the next relic out there, or the relic, which should be gold. And I have to ask this question: is this move the real deal? And I'm going to be the first one to admit, Chris. And remember our end of year show, if you guys were listening in, you asked me about gold, and I said, look, I'm not buying gold. I thought it would pull back, but I was looking for a nice, decent move in about 1,800 to look for a pullback, and that didn't happen. I mean, we just basically consolidated and then took off this year. And I have to ask myself, technically, is this like a real move? Because the dollar, yes, it did come under some pressure today, and we'll talk a little bit about the dollar as we go through the show. But gold really, really is moving. And I know you want to talk about other precious metals too, which I think deserve conversation. But Chris, gold, trading almost at all-time highs again. About that spike high that we saw on that old Sunday, Monday Asian morning, we're at 2150. Do you think it goes to 2200? What are your thoughts here on gold?
I have no idea where it's going to go, to be honest, but I favour it going higher. I think there's a higher probability of it continuing to go over and getting to those levels. Obviously that's what we're trying to do, is skew the risk profile. And I think if you look at positioning in gold, it's still pretty light, to be honest. I mean, you're not seeing any kind of length in the futures market at all. Specky accounts are, not really doing a huge. We've only just started seeing inflows into gold ETFs. It's only just really begun. So, I think positioning's still pretty light, even though we're at these record levels at the moment. I know producers have been selling into this move. Flow desks have been saying that. But we've seen fast money accounts chasing this move. But yeah, people, I mean, it started off, it's rallied in the face of rate cuts being priced out. Real rates have looked like they want to come down further. I think that's supportive of gold. I've been making the case for a stronger US dollar, but the US dollar is grinding lower at the moment. It's not, it's not trading the fundamentals. I think there's a sort of a real rate spread between Europe and the US, which is supporting euro dollar. So I think with positioning in mind, with the fact that it's held up so well in the face of, what we've been seeing with the repricing of rates, then I think it goes higher. But I do worry about next week's CPI print. I mean, if we see a stronger CPI print, then some of this gold length could come out. But I favour the upside. And yourself?
I still favor the upside. I was looking at a couple of sentiment indicators from different brokerage firms, and I do see that retail's trying to fade this move higher, which is dangerous.
100%.
Yeah, I think, and gold, I think it's dangerous. So it seems like we're just going to at least, if not anything, we're going to at least break these highs because it seems too juicy now. Like dealers are looking at that 2150 level and all the stops that are probably right above it, and saying, it's like that donkey that you're dangling a carrot in front of it, getting it to move over the cliff. That's what I feel like the dealers are dealing with gold. Like, go ahead and try to short it here. Put your stops above 2150. I'm going to see if those get filled. I'm going to try to fill those myself. That's how it feels to me anyway.
I mean, I think the thing with gold and for a lot of retail traders is like anyone else. I mean, you've just had a very sleepy market. Gold's been trading in a range, and then suddenly you get this 2% day, and it just kind of just comes out and smacks you in the face. It really sort of sets you alive. When you have this period of very, very low volatility, very subdued, trading ranges playing through, and then bang, it just comes out. I mean, it really springs everyone into life. And so, I think everyone felt that. It started to move up. Everyone started to sell it. A lot of retail started selling into that move. I think there's probably people now looking at it at higher levels to try and get set again. So we'll see what happens there.
Yeah. Like I said, I go ahead.
Yeah, I was going to say, I just want to go into the ECB meeting. Just keep this fluid.
Let's do it.
I think, they're not going to they're not going to cut rates. I mean, obviously, no one's expecting that situation. The question is whether they open the door to an April cut in any capacity. I suspect it's a low probability. I mean, everyone's sort of on this June trip at the moment that they're going to cut, and they're almost a slave to the Fed. Everyone's expecting the Fed to ease in the June meeting. Probably, therefore, by default, the ECB will do something similar. We are going to be getting their economic projections as well. We're expecting modest downgrades to GDP and HICP. But is it going to be enough? Are they going to be so prolific, the downgrades, that it gives you the urgency of a cut in April? I don't think that's going to be the case. So it's going to be small tweaks to the downside in their growth and inflation forecast, both for headline and core. And I think it just gives everyone on the ECB this kind of galvanized approach that they're going to be looking to ease rates. But as a currency trader, Blake, I mean, we can talk about the DAX and other sort of European equity markets, but as a currency trader, question for you is if you've got euro exposures over this meeting, are you concerned about holding those euro exposures? And do you think we're going to get a catalyst from this ECB meeting that's going to set the euro in one direction?
So let's piece this together a little bit differently. As far as just overall feeling about the euro, I do talk to a lot of people. I do a lot of interviews. I read or I listen to a lot of interviews, a lot of podcasts about how traders and analysts feel. I almost want to say unanimously, most people feel that the Eurozone and the Eurozone economy is so much weaker than the US. It's inevitable that it is, right? That it's inevitable that they cut rates ahead of the Fed. But with that expectation coming in and looking how the euro is trading, I think the euro has a pretty insatiable bid. And you look against a lot of crosses, whether you're talking about the Euro Aussie, Euro Canadian, which happens to be one of my favorite, Euro Swiss, which has been on fire. Michael Brown likes it as well. Your colleague over there in the UK trade-off. The euro looks really bid. And look at the euro dollar today. We're back up at 109. So I think the risk is that the euro actually trades higher if Christine Lagarde and company is just not dovish enough as the market expects them to be. So
yeah, I think it's a bit like the gold trade, doesn't it? Because I was saying a week ago, you could argue gold should be 50, maybe $100 lower than where it is based on classic fundamentals, but it isn't, and that's got to say that, and that was making me say, and rightly, I mean, it's held up very well, and bang, it's popped up, and you can argue that the euro should be trading lower. The Eurozone is probably running at about 0.4% GDP. It's up from 0%, but it's still very low on a relative basis. But what I think you've seen, if you look at a 10-year German real rate, 10-year, so basically effectively the German Bund adjusted for a 10-year expected inflation over that period, and you do the same for the US, then actually what you've seen is that European real rates have been pushing up more aggressively than US real rates. And there's been a very strong relationship between euro dollar and that real rate divergence. And that's really, I think, been supporting it. So I think you've got to understand where real rates go in the short term. We talked about it, gold. And, if US real rates fall, yields fall on a faster basis, then euro dollar is going to be pushing up to 110. I think that's been the fundamental driver of the pair at the moment.
That's great insights, in my opinion, Chris. And I think that, having euro exposure, not euro/US dollar exposure, but euro exposure on the long side, I'm really not worried about it right now because it is all the reasons you pointed out. Anyway, since we're on the discussion of the euro versus the dollar, let's talk about the non-farm payroll. And I want to talk about what you think are the best dollar plays out there, because I do believe. Oh my gosh, this is deja vu.
We're both going to say the same thing, aren't we?
Yeah, I mean, economic data. This is the month, right, that you're going to see the jobs report show some signs of weakness. I think we got a little glimpse of it in the ISM, and you see, that with the ADP and the JOLTS, although the JOLTS data was, good. But I believe that the NFP is going to really start to show a little bit of signs of weakening, which is going to allow for further dollar weakness. And the dollar's already gotten ahead of it. You've seen yields break down. The dollar yen's flirting with some pretty important levels right now. I wanted to ask how you wanted to play the dollar, because I'm not in the camp that I want to buy the euro on dollar weakness, euro dollar pair. I actually want to short dollar yen. That's the play that I really want to play. However, I've tried to bet against the U.S. economy and the U.S. jobs market on plenty of occasions, and it hasn't really worked. So
where are they finding all these jobs from? Where are they finding all the jobs from?
I don't know. Apparently, In-N-Out Burger does hire a lot of people. I don't know. I don't know. But I will say this, though: if the data is good, the way I want to express dollar strength is I want to buy the dollar Swiss, which has been my favorite.
I was going to literally just.
Am I taking all your answers? I'm sorry.
No. I was going to say. I was going to actually say, Blake, I know what you're going to say, which is going to be short dollar yen. If you want to go long dollars, go long dollar Swiss. And if you want to go for a high beta move, go long Aussie dollar against the yen, or go even short dollar Mex.
Ooh, now we're talking. Okay, so let me rephrase this just to make sure everybody's clear. Strong data. How are you going to play it, Chris?
Well, strong data. Like dollar Swiss is the one that I think we both like, right? I
agree with that. Okay,
I just think fundamentally the Swiss franc is just a horrible currency.
All right, fair enough. And we're going to talk about the Swiss franc further, so make sure you all stick around. On weak data, what do you want to do?
Well, it's all right. Coming out after the fact, it obviously goes short dollar yen. I think it's the cleanest play. It's the purest play. I mean, it's not going to be the best bang for your buck. Going in a high beta currency is going to get you a higher percentage move, but it's the cleanest play and the most obvious play. We saw some life coming in the Japanese yen yesterday because a couple of members are saying that they want to move out of negative interest rates in the March meeting, and that caused a bit of life and certainly some buying, so some selling in the JGB futures market, and that's got us kind of thinking maybe something is a bit more supportive of the yen. But let's go for the numbers. I mean, quickly while we've got it here, Blake. I mean, we're sort of, the market's looking for medium of about 200,000 jobs. The unemployment rate 3.7% unchanged. Average hourly earnings come down to about 4.3%. I think, look, really quickly, the most important thing for me and where the dollar's going to key off is that unemployment rate. I know that comes off, the household survey, different survey from the non-farm payrolls numbers itself. But I think that's the easiest thing to do. It's very difficult to trade payrolls because you've got average hourly earnings, you've got the unemployment rate, and you've got the non-farm payrolls number itself. So I think the market will key off straight away that unemployment rate if it's a change.
Now, the average hourly earnings is expected to come down like 0.3, which is a quite substantial move lower. So would you say that maybe there's a risk that the wage data comes in a little hotter, and maybe that's what supports the dollar? Yeah.
But what we've got to understand with the average hourly earnings is it's down to the average work week as well. If wages are staying the same, our earnings are staying the same, but the average American's working longer, then obviously that has an impact on the average there as well. So it really depends on average hourly earnings, how many hours have been worked and how that feeds into it. But yeah, I mean, simplistically, the algos are going to key off the first number there.
What about the leap year?
Oh, There's always a seasonal adjustment. In all this data flow, there's always a seasonal adjustment. Yeah, but there's always a reason to explain the weakness or the strength in some sort of seasonal adjustment, isn't there? That's always what you see.
Of course.
The market's the markets. If the reaction just keys off the numbers, and that's really. But then the economists try to explain it with some sort of a seasonal adjustment. Anyway, let's go into the charts that matter. Let's go into that's a setup. I still want to pick your brains about this leap year situation, but let's bring up silver because we could talk about gold till the cows come home, but yeah, actually palladium. We've seen palladium on the session up nearly 10%, and then if you put it on a long-term chart, it's a rip your face off bear market rally we're seeing in palladium because it's been in a long-term downtrend, and we've seen that. But yeah, I think what we've seen with silver's an interesting one as well because it has. Yeah, I think gold's been under the radar of Bitcoin. Bitcoin's got all the attention, even though gold's had this kind of stealth move up to all-time highs. Silver's had even less attention. We've had this really nice base that's been building. We've got a double bottom. We've broken through the neckline, which argues for a sort of technical target around $25. It looked like it was rolling back over to the retest of the breakout point, but then the buyers have stepped in. We've seen, well, it wasn't quite a bullish outside day reversal, but we've seen a strong move up. The bulls are in control of this move. I feel like we get it to $25, perhaps a bit shy of that level. But technically, it's building a really nice base. It's broken out, and it's been under the radar of gold. But it looks like it wants to go higher, in my opinion. How are you reading the price action and the flows there, Blake?
First of all, I just want to state this, and I say it a lot on our shows too. I think silver is really underperforming gold, and longer term, that's going to weigh on silver prices at some point. But I think the scope of this to get to 2440, 2450, which would be near the next little hump of prices that you have there, the next set of resistance, that is also a 618 Fibonacci level, so it's going to be a key level. But your target around 25 is near the 78% retracement. And to see us get to that level, to $25, I think is very realistic. 25.10 is the 78% retracement, and it actually would still mark a lower high. Don't forget that move that you see there in December at the end of the year, that spike up, that's when gold spiked up above at 2150, and then silver really failed. So I still think that silver can play some catch up, but it's like it's being dragged by its pigtails behind gold, kicking and screaming the whole way. But it still looks like there's some upside in this move, Chris.
Yeah. So, and put palladium on the radar as well. See if we get some follow through buying after a monster short covering rally that we've been seeing on the session. We'll see how that plays out.
Yeah, I think a lot of these metals are squeezing. Speaking of squeeze, let's jump over to the S&P. I haven't talked about the S&P in a long time with us here, Chris. I've just every time you mention it, I'm like, it looks bullish. It still looks bullish, and it still does. I'm going to give you a line in the sand, and I've used that analogy for a long time. Just imagine there's a line in the sand that you draw with your toe, and you're like, if you cross here, you're bearish, but as long as you're above it, you stay bullish. Well, that line in the sand for me really is the lows that we touched yesterday or 2 days ago. If you want to look at it like 2 days ago, it's 50-50, 5050. As long as we're above that level, you don't worry about it. Now, below that, we have this nice handy little channel, and that channel support would probably be closer to 50, about 5,000, maybe slightly below it. Nice channel. Line in the sand. While you're above 50-50, there's the 127% extension. The long-term 127% extension is right around just closing in on 5,200. You have to continue to target higher, but I'm going to let you look at this consolidation of the RSI. The RSI, I think, is going to help guide you whether we break down, we break that line in the sand, or we continue higher. I think the RSI is poised to break. So what do you think about the S&P here?
I think this is, it's going to be a fascinating journey. And I think when you see it, if it breaks down, I think there's going to be opportunities for shorts. We'll see the VIX trading to 16%. And I think, realized vol will then sort of creep up as well. And that will give you, better shorting opportunities in this market. I mean, I've been really infused by the way the market's held up. You get these one-day sell-offs, the market rallies. I've been infused by the way it's held in, despite Apple, clearly in the doghouse, Tesla in the doghouse, Amazon's not really been firing up. It's all Nvidia, back 887 again, and that can't be stopped ahead of the GTC conference on the 18th of March, which I think a lot of people are buying into at the moment. But yeah, I've been infused by the way it's been holding in. I mean, we've seen very poor, we've seen reduced leadership and concentration. Market internals don't look great, but the market keeps going up. I mean, anyone who's telling you to short the market based on concentration on market internals, don't listen to that situation. It's been a very poor signal for a long time, if a signal at all. So I like the way it's trading, but yeah, I mean, I think if that RSI breaks down, if it breaks through those lows, I think that will give me more confidence to look at those short positions. But at the moment, for people who've been shorting outside of intraday moves, it's been a one-day affair, and then the market bounces back. Very, very frustrating, and so therefore it's just been hard to do, and I haven't been doing it myself. So, but yeah, I think
Chris,
you'll get better. Go on, hit me.
Go ahead. I'm sorry.
No, you go. Go on.
I was going to say, a few weeks ago, we entertained the idea of a potential blow off top. I think that situation is still valid. And, pullbacks have been very shallow. They're getting more shallow. And the more shallow those pullbacks get, the more traders are forced to be on the long side. So, the RSI, even though, it's poised, it could break down. It could definitely break out to the upside too. Don't forget that.
Yeah.
So.
We just got to keep an open mind. I mean, everyone's saying, what's going to cause us to keep going higher? What's going to cause us to keep going higher? I mean, we don't know, but I think just strength begets strength in this market, and people just chase. I mean, we've seen that in all asset classes recently. Momentum is a very powerful force, and it continues going higher. I mean, a lot of sort of people fundamentally based value have just been dismayed by everything they've been seeing in the equity market, and they've missed out. And I think you just keep an open mind and if the market's going high, stay with it, to be honest, and don't try and overthink it. I think it's probably the easiest way. I want to go to Aussie Swiss, an interesting one here because the Aussies had a bit of a rebound because we've seen a bit of a rebound in Chinese markets. They're not still out of the woods. We saw the NPC meeting coming out of China. I don't think we're seeing major surprises, but it's generally quite supportive of economics, and Aussie proxies, China proxies have worked quite well. If we have a look at Aussie Swiss, we've found this really nice channel for quite some time. This really strong trading range. I've just drawn that sort of black dotted line, which is the sort of average level. And I think, FX markets have been such good mean reverting tools for so long that we've sort of come back into the median there of that move. And I feel that we probably push back into the top end of that range that we've got with obviously the top black horizontal level there, which has been the defining point for Aussie Swiss for nearly coming up to 12 months now. So I think we get up into the top of the end of the range. I think we squeeze through these recent highs and we get up to that. Again, I just don't like the Swiss. I don't particularly like the Aussie dollar either, but I feel that there's further upside in this and we get into the top of the range. How are you feeling this?
Well, it's one of those Swiss pairs, the Aussie Swiss being one of those that I was waiting for it to actually start to break higher because I am a Swiss bear. And I think I've expressed that view over the last several weeks quite consistently, and I continue to do so. So to think about the Aussie Swiss trading up towards that channel resistance, I'm with you. I don't particularly love the Aussie. I don't like how the Chinese markets have really reacted, but I think the Aussie could easily squeeze. There's a lot of reasons why stocks going higher, the Aussie could at least play a little bit of catch up, and so for it to travel to the top of the range, which is not uncharted territory, against a currency that I don't know if I'm as bearish as you are, Chris, but I'm pretty bearish, and you sound like you might even be more bearish.
If you look at all the traditional fundamentals, it doesn't look great. I think the only thing that's interesting here, which would be an event risk, is later on in the month we do get the Swiss National Bank meeting, and after the CPI numbers that we saw earlier this week on Monday, which were very modestly above consensus. It's a line ball call. It's basically 50-50 whether the Swiss National Bank starts us off with a 25 basis point cut. So obviously if they don't cut later, there's obviously a long time until the 20th, 21st, I think 21st is when the meeting is. That's a long time in FX markets to hold a position. No one really holds positions that long in our world. But yeah, I think nearer the time, if we're to get that, and obviously if they keep rates unchanged, then there's going to be a decent move in the Swiss franc because we've got a sort of 50-50. It's going to be a live meeting. Do we get a cut? Do we not? I mean, it's really, it could go either way, and obviously that's a massive risk. And maybe people run short Swiss franc positions into that meeting, but I think that's going to be a really, really big one. I know everyone watches the Fed, ECB, the tier one central banks, but I think for FX traders, the Swiss franc's a really interesting currency, and you've got a really interesting meeting coming later this month where they could they could cut rates and lead G10 central banks off on a rate cutting cycle.
Yeah. I mean, look, I'm waiting for that day, and I can and will, Chris, if I need to, stay short Swiss francs all the way until that Swiss National Bank meeting. It may be rare in our world, but I will do it. I'm telling you.
Yeah, well, I mean, it's not expensive. Like, if you're going to be shorting dollar yen and holding the position, it's going to be expensive to do so, right? Because you're going to pay a lot of carry on the back of that. But Aussie Swiss, I'd imagine, I don't know what swaps are paying at the moment, but I imagine that the carry is going to be somewhat slightly positive. So it's not going to cost you to hold those positions.
Well, even Swiss yen doesn't cost very much, and I'll talk about that here in a minute. So stick around. All right, I know we need to keep moving. Let's take a look at my last setup, which is the DAX. And I know you guys expect me to say this when I'm on here. Oh, the DAX is dead, but no, it's we're at the golden Fibonacci. I like to say it's the golden Fibonacci ratio, or the Fibonacci. Our producer Chris asked, "What does Fibonacci mean?" And I don't know. I just like the way that it sounded, so I thought it was cool.
It's like brewski.
Anyway, it's like a brewski, and I do like brewskis. So as long as we got that out of the way. But what you're going to notice here is we stopped at the 161% extension golden fib level. The 3-candle formation at the very top there is called an evening star. So that's actually a bearish reversal pattern. We haven't seen any follow through, obviously, because US equity markets continue to hold up pretty well. That doesn't mean that it's going to reverse, but I'm going to tell you this. If you have an inkling of like shorting the markets, the DAX, I think, is ripe for a short if equities globally start to pull back, because you're at the golden fib. You have very managed risk. Also, I don't know if you've looked at it, but the German economy, you look at like manufacturing PMIs, they're still in the like mid to low 40s. So I mean, I can't figure out why the DAX is all the way up here, but it is.
Well, I think the issue is that I can't remember, the large percentage of German companies don't actually make money in Germany. They're from outside of Germany. I mean, it's like the FTSE. They're not representative of the economy because they're making money out of China or wherever it is. So, you've got to be taking a sort of a more international stance, I guess.
But how well is the Chinese economy doing right now?
We don't know.
All right. Well, the German DAX seems a little mispriced to me, and I love finding mispriced opportunities like this, in my opinion. How do you feel about the DAX here?
Well, it's just there's a lot of companies that in Europe which are kind of their equivalent of the Magnificent Seven. But yeah, I mean, it's like the Euro stocks. If you have a look at the Euro stocks 50, I mean, it's trading. It's just onwards and upwards. I actually like the price action in Euro stocks. I know you're coming up to these levels here. Maybe there's a sort of pairs trade, short DAX, long Euro stocks, sort of relative value trade that you can get out of that one as well. But yeah, I mean, we're coming into key levels, and we'll have to see if it's just, again, open-minded. Can we continue to push higher in this situation? So yeah, we'll see what goes on. But definitely watching the price action on that one, because those evening star patterns can play out quite nicely. So yeah, definitely one for the radar. And you obviously got the divergence playing there as well. So yeah, great setup, and obviously one to put on the radar and to react if we do see it breaking down and jump on board. I think that's what you want to be doing. So higher probability setups, but yeah, waiting for the market to come to you and then apply the trade, I think, is obviously so key. Anyway, let's go to play of the day. Let's see what's on the mind. I've got a trade. Last week I was looking at short HK50. The position's pretty much where it is at the moment. So we saw it breaking through the uptrend. I still it's frustrating, so I'm taking that one off. But what I like at the moment is an interesting one. Is Apple against the Qs, the Nasdaq ETF, effectively, and you can see this in the ratio analysis. The fact is that Apple is the the numerator. So when that ratio is falling, it's basically showing that Apple is underperforming the Nasdaq. Now that's a hard one to short or bet against the Qs, because you're betting against Nvidia essentially, which is just absolutely strong as an ox, but I think the juice is probably coming out of that one. But the underperformance is so significant now. Apple is so in the doghouse that they basically come to the most oversold levels in this pairs trade that we've seen ever. I mean, take out 2018, this is one of the most oversold levels we've ever seen in Apple on a relative basis. And I know there's a lot of hedge funds sniffing on this trade and saying we can induce some mean reversion. So being long Apple and short the Qs from a just looking to try and trade that mean reversion. I'm not saying this is going to go up forever because there's, I don't necessarily like Apple too much, but that elastic band has now been pulled. You can see that drawdown is significant. So I think there's a mean reversion trade that's coming in this. I like to see things base out a little bit before we put this in. But I think, there's a lot of hedge funds at the moment that are sitting there going, this underperformance that we're seeing from Apple, I know that they're trying to iPhone sales down 24%, and there's you're going parts of the Qs which are doing everything right, but the question is so much of that priced in? Are we now due for a little bit of mean reversion? I think we're coming to that point in that situation. But I know there's a lot of hedge funds sniffing around this trade at the moment to go long Apple, short the Qs, and just try and trade that mean reversion in the short term there.
Woo, man, that is a scary one. But Chris, I'm going to be watching that and I wish you the best. Good luck with that one. My play of the day, my play of the day is going to be the Swiss yen, and I'm just not going to mince any words here. I'm short. I plan on being more short, and I plan on getting more short, and I plan on playing it down to the 200 DMA. I don't think I need to say anything more than that. Is that I think that I agree with Chris as far as the Swiss franc is the weakest currency, and it probably should be shorted this year. It's kind of like my trade, the currency I plan on preying on most of the year at this point. It might shift to the yen and being long yen. So if you just marry the two, short Swiss yen, I think the BOJ is getting very close to moving. As you pointed out, Chris, some people might be looking at this month, and if that's the case, Euro Swiss I think trades a lot lower through this channel support. You can see the RSI is breaking down, and the near term channel, the long term ascending channel could be a long term target. That's not for today or tomorrow, but that's something that you think about along the longer term. I think the 200 DMA is within reach, though, within the next couple of weeks. Love
the trade. Love the trade. I mean, my one's a bit more exotic. But this is a trade that I love. I mean, we're in distribution. I think it breaks down. I agree with the Swiss franc sentiment. I think that yen shorts are significant. I think they need to come out of the market. I love the trade. I think it breaks down. I'm backing you. I'm backing you all day, my man. I think this is a good little trade, and we'll have to see. I think this is one that you can hold and dream of England. But I think it's a good one. I think I'll be looking at that one myself. So getting on the platforms and having a crack there as well. So thank you, Mr. Blake Morrow, for your time today. I think some great thoughts there as well. Thank you for everyone sticking around. I'd love to hear your views on the market. Smash the like button, subscribe where you can. Helps other people find the channel as well. And we'll see you back next week for more of the trade-off.